All right. And, yeah. So, kind of breaking out of the chill over the weekend. I think it's supposed to be a shocking heat wave of highs of 32 today in the lovely little TR town here on the Jerky Shore. So we are going to have a little bit of a heat wave today and get up in the 30s. Yeah. So looking around the markets today, it was a pretty crazy weekend. You had Bitcoin absolutely getting demolished over the weekend. I believe it got down as low as like 74. So we're going to add a little alert there. Got down to 74, now trading 77. So a pretty decent bounce right at S2. Pretty cool, right? Not at, but damn well close. And a couple of touches there and a move. So, respecting the pivots on Bitcoin, and that's about all I have to say about it. It is what it is. It continues to be. You still seem to see the same 10 or 15 jagoffs over on social media pounding the table saying, well, this is the oldest trick in the book, and blah, blah, blah. I don't even know why these people even have a platform anymore. It's like, shut up. Shut up. Social media and beating the table is not moving these markets anymore. They are real markets, and they're going to move the way they move. And there's nothing any, 2-bit panhandling influencer on YouTube or TikTok or Instagram is going to do to change that momentum. And then they're all going to have those, 400 to 500, maybe 600 idiots. And probably thousands upon thousands of bots who are actually their followers, all chime in going, yeah, right. I'm buying all the way to zero. It's like, it's just an asset, folks. Just wait. Just please, if anybody, because I get a lot of questions too, like, what do I think about crypto? It's just another asset. It's just another risk on asset. Just like anything else, whether it's real estate, whether it's stocks, bonds, business ventures, whatever, coins, whatever, it is just a asset, and they happen to be digital, and that's all it is. And trade it accordingly. And if you have a belief, then by all means, do what you need to do. But that's it. That's how I treat it. I do not own any. I did. At a time. Right now, I don't feel any need to own any of this stuff. The only thing I do have is I'm long, I think I have about 100 or 110 shares of IBIT, IBIT, which is the ETF, the Bloomberg ETF. And that's it. That's all I have. And that's about, and I'm actually up minuscule, maybe $50, I think. I think my cost, and it's like 30, and it's at $40 or something like that. So anyway, but that's it. That's all I have. I have some exposure to it, very, very minimal. And, take it for what it's worth. There's not going to be any one of these, I'm going to say, mainstream coins that are going to change the world. Because the reality of what is going on in the whole crypto space is that companies are actually going out and making their own blockchains. They're literally ripping off, and look, it's happening. They're ripping off the blockchain code from any of these other major chains and making their own. And they're finding it's cheaper, and then they can control what's going on. So anyone's coming saying, it's going to be XRP, or it's going to be Titanium, or whatever the fuck it is now, and they're full of shit. Because the banks have not completely adopted any of it. They're all in the process, or have been in the release of all their own chains and tokens. And there you have it. And that's what it is. Because if it was otherwise, really, do you really think this thing would be tank. You think all this would be tanking? No, it wouldn't. So there you have it. And that's kind of my opinion on it. Do you need to have some exposure to it? Sure. Just like anything else, you do need to have some, but I don't see any reason. Anyway, that's all I want to say, because fuck Bitcoin. Really, fuck it. I've been saying fuck Bitcoin from the get-go because I just never bought into it in the first place. And, this is actually kind of beautiful to see it do what it does. I don't want it to go to zero, but, when it gets around 50, I'll be interested. So anyway, looking at the markets today, I'm not really seeing any good. I'm not really seeing any good entry points, especially on the Russell. If you're looking for day trades, even S2, R2 are usually pretty solid areas for reversals. I just don't see it today from an S2 point of view because the markets had so much movement that, I think if we get any selling pressure, it just has appeared that there's not enough buyers out there to kind of quell it fast enough. So I'm actually thinking that S3, and it's a big move, I'm not going to deny that, but S3 is probably a better spot if we touch there than S2 is. Because, even back early this morning, we retested S3 and rejected and have rallied very, very nicely since then. But I do kind of like R2. So I'm going to mark out R2, which is 2662.20. And that's pretty much it on the Russell. And then looking at some of the other indexes, and I'll be quite frank, instead of being Bill today, but I will be frank. And I don't really like the trading action on the other indexes, especially the ES. I don't do the NASDAQ. I was going to try and start doing the NASDAQ, but you know what? Honestly, it's not for me, folks. It's just not. I don't like the way it trades. It's too thin. The Russell's thin, but I feel like the Russell is thin enough. It's thin, but I know what I'm getting in the Russell being thin, right? I mean, and the reason is like, look, I'm trading, smaller companies, so I kind of get that. But the thing about the NASDAQ, you have these big, massive companies in there, and the fact that it trades so thin the way it does, it's just very odd to me. I can't figure it out. And the ES has just been too slow, even though it has moved really well of late. It's just been, the movements when it does, after it moves, it kind of goes up or down, and then it just kind of sits. And you really have again, I've been having a rough time, getting ahead of that in the ES. So I haven't been trading it. And so I don't see anything. I mean, if I were going to do anything in the ES today, R1 looks the most interesting because there was a couple of touches last week up there and it couldn't break out. And that was before the, big move down, and we are rallying. Same thing here in S3, but this really kind of didn't respect S3 at all here. I mean, it really just ripped it apart. And to say that this respected S3 would just be a complete misleading on anybody. So it didn't even respect that. But R1 looks pretty good on the ES. And if I was going to take a stab at a trade today, that's probably where it would be a short in both markets. And maybe pile on a little, because I do think we're going to be, I think we have a interesting couple of weeks here in the big markets. I don't really think I don't think we're going higher. I do think we're going a little lower. I don't think we're going much lower, but I think we're in for a lot of chop. And I think it's going to be real heavy chop with a lot of volatility, because volatility's still kind of getting near 20. So anyway, that's it as far as the broader markets. And then as far as like commodities, whatever you want to do, but gold kind of holding up after the big move. I know it had a bad morning, supposedly. I didn't even look, but just from the news cycle, it had a pretty bad morning overseas, which makes sense, right? Because their markets were closed on Friday when ours collapsed, so that kind of makes sense. But but it does seem to have stabilized. We'll call it that. And silver still over $80. So take that for whatever it's worth. But I think the hero here in all these markets, in my opinion, is going to be the copper. I like the way copper has consolidated. I'm going to call it consolidated here after a big, massive run. Really decent move to the upside overnight as well, and recovering, even though it's down today, 2%. But I think out of all the metals, I still think copper is the one, I think going forward this year is the one you're going to want to own. And that's just my opinion. I think a lot of what's built into the silver and gold trade was a lot of speculation and a lot of, I think hedge funds trying to get ahead of the other parts of the market, and there was a lot of fluff in there. I mean, let's face it, it was a lot of fluff, and I think the bubble needed to be burst, and it was actually good that it did, because at the rate it was going, I think the correction would have been 10 times worse in here if this would have continued the way it was. But I think copper is the only one, again, with the commercial interest and the commercial use and the demand. Like, look, just put it simply, they're going to be building all these data centers, and what do they run on, man? They run on copper. Anybody been in a data center and you go and walk around, there is a lot of copper hanging around everywhere. I mean, just from the power, but not even from the power, from the Ethernet lines that run, because a lot of them are still on copper. Say what you will. I mean, I know a lot of stuff is a fiber now, but look, there's a lot of stuff that still runs on copper in there. And then all the power, right, is copper based. There ain't nobody running conduit that don't have copper in it. So, and then with all these things being built, the demand for copper is just, I think it's going to stay. So that to me is going to be very, very interesting going forward. With copper. And then you really can't trade copper futures. The only way to really trade copper is through FCX. In my opinion, FCX is like a true proxy for copper. They do other mining, but the majority of their stuff does come through copper. So that's how I play it. I always have played it through FCX. There's other ways you can play it. There's ETFs. I would kind of stay away from the ETFs because the ETFs are kind of a scam, I think, not the true copper ETFs. And not that they're a scam, but, they're lumping a lot of the companies together that, happen to do copper mining, but do all kinds of other mining. And it's nothing more than really a glorified metals and mining ETF. And they just happen to tag it with copper because they're going after companies that have a certain percentage. Again, they're just trying to capture a marketing piece for a metals and mining fund. So that's why I wouldn't really get involved. I would stick to, again, FCX is my pick. I do, and then I'm going to talk about CoreWeave too, because someone mentioned CoreWeave, which I kind of like CoreWeave from a point of view. But for Freeport, what the hell is that? That's not what I want. What is that? The Invesco currency shares, the Canadians. What the heck is that? I don't want that. But FCX is nice to trade. I do have a couple of positions on in February. I have a strangle. I got a 60, 65, so pretty tight strangle here. And my goal here with this was essentially to kind of get long, but kind of sell a call and kind of do a covered call, like synthetic covered call, if you want to call it, right? Selling a put, selling a slightly out of the money call, selling an at-the-money put. It doesn't look too good today because it's down a couple of cents. And when I did sell this, it was it was in the money. So I'm kind of doing that way and synthetically doing it. And the reason I did that is because efficiency of capital. This trade was under $1,000 as far as use of capital, which if I were to do a regular covered call, I would have to burn $6,000, right? Because it would have been $6,000 for the shares. And then I would have sold the call and it would have been less, but I would have to use $6,000 of capital. I really didn't want to lock up that amount of capital in one trade. So, and I think you can do pretty much anything you need to do in here and go out to either February or March. I kind of like March here too, because my goal with the February options is that, you know, in a couple of days, when I get down to under 30 days in there, I'm probably going to roll them out to March. But I do like the 60s here as like a synthetic. These spreads will tighten up, so don't worry about those because this is kind of wide. But these will tighten up once the markets kind of go. But you can see here, selling a 60 put is synthetically gives you almost 50 shares, and you're only using $1,200 worth of buying power. So, you know, pretty efficient trade. And then if you don't have the money, right, cover it. Do like a 10 wide. And then even a 10 wide in there, you're only using 600. You got almost 60% probability of profit and 33 delta. So, you know, there. And to me, that's a good play in here if you're looking to take advantage of copper. And is it going to go straight back up? I have no idea. But I do know that from a demand point of view, the future looks really good this year for copper. And this stock has, you know, you look at this stock on a chart, it's been a monster in a short period. I mean, this is November. It was $38. It went up to almost, did it go to 70? Didn't quite, got to 69. All right, so, and now CoreWeave. So I marked a couple spots. I didn't realize either that they haven't even been around a year, CoreWeave. I haven't even realized that. It just, for some reason, it just seems like they've been around longer than that. I kind of like this spot down here, though, even though it's trading 92 today. Is it actually up? It's down a little bit this morning. I marked it's 87.08, and I marked that. I'm kind of looking at that as like a short-term bottom here, that it's got to hold that. You know, from a technical perspective, it's got to hold that. We have interim swing high here of 115 or so. And, you know, looking at it from this point of view, and as far as a trade, I kind of like let's clear that. I kind of like going to March. I would try to stay away from February. The only thing I would do in February, if you want to play earnings coming up next week, which is what I'm going to do also, I will do something in February for this. You could do a one standard deviation strangle in here in CoreWeave. I was actually looking, it's actually a little better than a standard. This is actually a really nice trade. For earnings in CoreWeave. And don't pay attention to this because this is messed up. But yeah, the 7120 getting $2.91. Hopefully by the time earnings come around and you do this trade, you'll be able to do this one for maybe close to $3, but 78% probable. I'm not going to put this on today because the earnings are next week. But just kind of getting ahead of it, I kind of like this trade for earnings. Good area, right? I marked out it's below what I think is the bottom there on that short term. And then 115 being the top, that swing high, this is well above that. So it's kind of in that outside of that range. You know, not a lot of buying power either for a strangle and a 78% pop. And it's pretty delta neutral. I mean, even it's kind of skewed from this perspective. But there's that. And so that's earnings. I don't really want to get into. But if I was going to do something in CoreWeave, I would definitely take a look at something in March or even April. And the trade I do like, if I was going to do something in here, as I kind of like a calendar spread, and doing a little bit in the money, and doing like a 90. So you buy the 90 in April and sell the 95 in March. So pure calendar spread. I think it would actually considered a diagonal calendar spread, right? And a diagonal meaning that if it was a true calendar spread, I'd be 90-90, right? I'd sell 90, buy 90. Here I'm buying 90, selling 95. So it's a diagonal. So anyway, just trying to be technically right. I mean, who gives a shit? Who honestly gives a shit what they call it? This is what it is. Buy the 90, sell the 95. Whatever you call it, whatever you want. You can call it a fish if you want. But that's what I'm kind of looking at here. Like, again, little in the money. Decent amount of delta, not a ton, but a nice trade because, again, only using $485 worth of buying power on this. And to me, it's a nice, cheap trade and a way to get long. And more importantly, what's nice is that I'm selling. Now, if you look at the implied volatility, and this is actually another reason why I would do a calendar spread as opposed to just a pure call spread, is I'm selling a little bit of implied volatility short term in March. Okay? I mean, you can see there's a 10% difference between March and April. So I am selling a little bit more. So, the likelihood of this having a little bit of a volatility collapse after earnings is actually going to be pretty good. And so even if this doesn't like skyrocket and it kind of sits around where it's at, I'm going to get some theta burn on this. And then I have the ability to roll this, right? I can roll this forward. I can roll this out to April. I can roll it up. I can roll it down over this time. So anyway, it gives me a lot of flexibility, is why I like the diagonal calendar spread here, while still giving me positive delta, right? So again, and I'm not kind of putting all my chips being completely one-way directional. I have a little bit of leeway here. So there you go. That's the calendar spread. This is what it looks like on the curve. And again, with this 95, I can, if it continues to go down, I can roll it down and then literally change the trajectory of this trade. And again, not be locked in completely in one direction. And obviously, if it goes up, I'm going to make money. So there you have it. All right. So there's CoreWeave. And that's kind of one that out of all these right now, and I call them the AI stocks, and it's kind of, but that's kind of where I'm leaning on as far as this space. That's kind of my leader. And I think it's in a good place again, but it's got to hold. I'm not going to be naive either. It's got to hold above this 86 number. And if it doesn't, that kind of changes the whole story. And that's really it in that space. I mean, quite honestly, there's not really been many story stocks other than you want to talk about SanDisk. I don't know what to do with this. It has all the things that I like to see, SanDisk. And it has all the things that you like to see in a stock, right? Good high volatility. Liquidity's pretty good. It's not great, though. I'll be honest. It's not that great. I mean, again, look, the open interest in here is pretty fucking loud. It's pretty bad, considering this thing has been the way it is. I think it needs a stock split, to be honest. I think if they split it, but I don't think they're going to. But I think if they split it, it'll make it a lot better to trade. I think it's getting to that point where it's moved so fast and so furious, and it's $500 and $600 right now. They're actually they're pricing people out, and I don't even think it's just people. They're pricing a lot of people out. Even any hedge funds or anything you start pricing the market out, and it's making it fairly illiquid. Same thing with Micron. You know, and I don't know. I have a hard time, folks, buying when I see something move like this. When I see stocks move like this, I have a hard time. Even if they pull back, I have a hard time buying them. I really do. I mean, because history has proven to me over the 30, I think it's in about 35 or 36 years. I think it's like 36 now of trading and doing this. It's always come to fruition that when anything moves like this, and the minute I say, oh yeah, I think it's got a short bottom, then it's going to go back. It's like literally I should just announce to everybody, hey, look, I'm going to buy it. And this way everybody can short, and then everybody can actually go and make money, because it never fails without question. The minute I get long, or will even take a long trade on this, it will blow up sky high. It is like clockwork. And I've been itching. Look, I'm not going to deny. Look, I've been itching to get long both of these stocks. You know, because like everybody, look, you know, even as long as anybody has done anything, nobody wants to sit and watch a stock make new highs after new highs after new highs. And as a trader, you never got involved with it, and never like, and not that I never got involved with any of these. I've traded them prior, months ago. But I got out thinking it was done for the time being, and no, it wasn't. But, you know, nobody as a trader wants to sit and have these things do what they're doing and not be involved. I mean, that's just the way we're wired. So it is what it is. So anyway, that's kind of the story with those. Because I believe there is going to be a bit of a reckoning with these, regardless of what anybody says and anybody's Substack and whoever's blah, blah, blah. And any, you know, some 28-year-old who's sitting in his apartment in, you know, Seattle, who's got a podcast, who thinks, you know, well, these are going, blah, 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 right? I mean, look back, history never always repeats itself. These always have a time where they just get completely blown up, and they're due. You know, it happened to gold, happened to silver. It'll happen to these when, I don't know. I wouldn't short them because, you know, no, I mean, I wouldn't short them with any like real conviction. Anyway, so that's kind of the story with those, and I don't see anything in the big, what I consider big tech world here as any kind of opportunity. They all kind of look the same, and they all look, for the most part, like dead money outside of Micron and SanDisk. They all kind of look the same, and all look, like I said, look like kind of dead money for a while. The other one that I was actually interested, though, in here, and I have been looking at, is a CrowdStrike. This thing has gotten pummeled pretty bad after making these highs at 5. And I kind of thought Friday was the spot. And I had an alert set down here, and it kind of busted through there. And it's bouncing a little bit today. It's kind of holding up here. But I'm not ready yet in here. But I do kind of like, there's a couple spots I do like. I like 429. What was it? 429. And then down here, and if you actually zoom out, it's right in this area, which is about 407. Right in here. All right, that is kind of a spot I am looking at. I do not think the time is now. I think this is going to continue to have a bit of a consolidation down here, but I will be kind of starting to nibble on this down around 406 if I'm going to do anything. With the likelihood that I'm full well aware that this thing could easily slip back through here. But again, I'm kind of looking at this as kind of a short-term bottom here. And I kind of think it needs to back down there. And otherwise, that's it. Like, I don't like Google here. I know everyone's gaga for Google and Gemini and all this bullshit. And look, for somebody who actually works in this space, it's all hype, folks. It's all hype. And I'm not saying that what they have isn't going to, but you can't tell me that what they have in Gemini or whatever it is, their AI, whatever. You can't tell me that translates into the amount of profits that the stock is actually forecast. And no, I'm just not buying it. Again, I think this is going to be another one that, I won't short it. Because I don't want to get my face torn off. But this is another one I think needs a bit of a whooping. And if it does get back down to $300, I think I'll start taking a look at it again. I think it's just gotten ahead of itself. And so for the most part, overall, that's why I'm just kind of sitting with my hands right now. Sitting with my hands, with my thumb up my ass is basically what it is. And I'm just kind of picking and choosing, things here and there. All right. And I think that's it. That's all I got for today. So we'll see what happens. Again, I'm not really expecting a hell of a lot. It looks like we are rallying pretty nicely, though. From these lows, at least. And we'll see what happens. And silver continues to have a pretty good day today. Up about 3%, 4%. While gold is still kind of struggling a bit. All right. So have a good one. And I will be back tomorrow. And I am, by the way, I did start a Reddit. I started a Reddit community. I'm going to post it here probably this week. I'm just trying to clean it up a little bit. I don't want it to look completely like garbage, but I will post it up here. And I try to do something on YouTube with it. YouTube kind of sucks for engagement, but Reddit looks pretty cool. For engagement, and I was going to do a website, but I just don't feel like managing a website. Reddit's perfect because it's kind of a nice avenue to where you can post stuff in a community setting and then have people comment about it. It's better. I think it's better than Discord as well, because then it's not something like it's another app. Everyone pretty much has access to Reddit. And so anyway, I started that, and I will share some links soon. So have a good